Coming up on Business Incorporated. Monetary Policy Committee of the Central Bank of Nigeria announced its last decision for the Buhari-led administration. And there's a special Business Incorporated special right here on Channels Television. We're going to be going live to the Central Bank of Nigeria for the last meeting and decision for the Buhari-led government. And the IMF has forecast that global growth will slow from 3.4% last year to 2.8% this year. Growth is then expected to accelerate to about 3%. That's next year. Risks to the outlook are heavily skewed to the downside, with heightened chances of a hard landing and a plausible alternative scenario with further financial sector stress. Global growth would decelerate to about 2.5% in 2023. Well, today, the Monetary Policy Committee of the Central Bank of Nigeria concludes its May meeting and announces its decision. Analysts expect another hike in interest rate, but we'll find out for a fact in about an hour or so. But first, let's head to the markets now, right here on the African continent. We see negative sentiment right now. We see the NGX down about 0.04%. In South Africa, the GSC, that's down 0.88%, still below that level there. For the EGX, 0.86%. That's the lone gainer we have at intraday on the African continent. But right in Kenya, that did close positive. 0.24% yesterday. All right, let's take a look at what's happening in Europe now. We have Emily Leshner joining me from Berlin. Great to have you, Emily. So what will investors be watching in the market today in Europe?
Well, markets are going to be keeping an eye on the response from other EU leaders to see whether or not they plan on following France with similar bans or restrictions. The aviation industry has had a lot to deal with in the past few years. Airlines are just starting to recover from the losses they took during the pandemic, not to mention the rise in fuel and labor prices and widespread strikes. So adoption of the policy across Europe could end up being just another hurdle.
That's what's happening in Europe. Thank you so much, Emily Leshner. Let's quickly head on now to the UK. We see Britain's stubbornly high inflation rate fell by less than expected last month in April. Consumer prices rose by 8.7% in annual terms in April, down from 10.1% in March. Let's talk to Juliana right there. Great to have you, Juliana. So how are investors reacting to this drop in inflation, and what does this mean for the BOE's rate hike in the next meeting?
Well, good afternoon, Laddie. Well, as inflation has dropped, the blue chip index has also dropped. It's deeply in the red at intraday. Let's quickly go through those numbers. The all shares down 1.64%, the FTSE 100 down by 1.71%, the FTSE 250, the domestic market, also down by triple-digit figures at 1.41%. The currencies market not doing any better. The British pound is currently trading down against the US dollar by about 0.32%, down on the euro 2 by 0.17%, and down on the Japanese yen by 0.41%. Just to quickly mention, you're referring to those inflation figures. Pretty good, because we know that stubbornly high double-digit inflation has been around in the UK for over a year now. In fact, this is the lowest CPI data we've had since, I believe, August last year, and that's because of the drop in energy prices. However, as discussed on your business shows throughout this week, we know that at the supermarkets, it's still costing beleaguered British households tens of pounds more each week to fuel their tummies, and that's a massive issue and a headache for the Chancellor. Of course, away from the economics, it's politics and the new change in foreign student visa rules, which we will be discussing extensively on Channels Business Global, as well as on the news at 10 during the week.
Right. I guess being able to afford to eat and heat, as you said, in the morning.
Eat and heat.
Eat and heat. Thank you so much.
It's a very cold island here.
I can imagine. Thank you so much,
Thank
Juliana.
you.
All right, now, let's head on to the UFC. U.S. stock futures fell slightly today as investors kept an eye on the debt ceiling negotiations. Futures linked to the Dow Jones Industrial Average fell 90 points, about 0.3%, while the S&P 500 futures and Nasdaq 100 futures declined about 0.3% each. Negotiators for both sides were expected to meet again this morning. But let's get a sense of yesterday's close from our correspondent, Marie Bird.
The U.S. stock market was down on Tuesday as the Dow Jones was down by 0.69%, the S&P 500 down by 1.12%, and the heavy tech Nasdaq down by 1.26%. Many investors are getting a bit concerned about June the 1st, what they're considering X Day. This could mean major challenges for the debt ceiling. It is unclear whether or not President Biden and Senator McCarthy will be able to come to a deal before June the 1st. Secretary Yellen is saying that if we go into default, this could be a catastrophe for the U.S. economy. It is clear that investors are a bit concerned and not sure if the U.S. will be able to broker a deal between the president and Senate before the June 1st deadline.
All right, that's how the markets closed in the U.S. Yesterday. Definitely be watching out for how markets close today. Still keen eyes on the debt ceiling negotiation right there in the U.S. But we'll take a quick break now. When we come back, we look at how other African economies, that's top African economies, fared with inflation. That's next. Do stay with us. Welcome back. Still watching Business Incorporated live on Channels Television. Well, globally, the fight against inflation continues at this time. And right here, we're going to have that decision later on the show today to see where the CBN's MPC are taking rates to next. But let's do a little throwback to the last meeting. We see they retained the MPR there was at 18% from 17.5%. Did get a bunch up there. Then CRR, that was at 32.5%. The symmetric corridor, that's plus hundreds, negative 700 basis points around the MPR. Liquidity ratio, 30%. Inflation rate for April, 22.22%. And we see right there, as we await the CBN governor and the MPC there to brief us, we see it's an empty room right now, but very soon that room's going to be filled up with reporters, the MPC committee, and the central bank governor, and he'll be briefing us on what the MPC is doing next with rates. See, they've raised rates already about 6 times in that raging battle against inflation. We already had raises this year, and the consensus is that we'll get another raise at this meeting, but not as hawkish as the central bankers have been. So right there, we'll be waiting soon. We'll have the central bank governor and the committee right there to brief us. But let's get a sense of how other top African economies are doing with inflation and how much they've raised rates. We have Will Ebong with the details. Great to have you, Will.
Yeah, thanks, Ladi. You know, we're seeing so much happening in Africa. Now, most African central banks, due to decide on interest rates this week, are set to keep them on hold as decade-high inflation eases after more than a year of tightening. And we're seeing those such as in Egypt, we're going to be citing countries like Egypt, Kenya, and Mozambique may also factor into their decisions a drop in global commodity prices and the unwinding of supply constraints. Expectations are also that the U.S. Federal Reserve may pause its most aggressive hiking cycle since the 1980s, which could weaken the dollar and boost their currencies. And this will be another consideration for central banks in Africa. Now, others like South Africa and Nigeria, both of which are facing domestic challenges, may keep inflation elevated, are poised to hike rates. And for South Africa, we're seeing inflation numbers coming in today, which seeing some easing in their CPI from 7.1% to 6.8%. That's a good one for the country. So they're going to be meeting on May the 25th, and that central bank is going to be deciding if they're going to hold rates or they're going to keep hiking rates, as that's a stance that, you know, the projections are for the country. Now, we're looking at Ghana. We're seeing that Ghana They're going to be meeting, they're going to be deciding today, and the decision is going to come out today. But we see the inflation rate easing as well, and it has eased for the 4th consecutive month now. Now, after it hit a 2-decade high of 54.1%, that's a really high rate of inflation for the country. We're seeing it dropping from 45% to 41.2% in April. Now, the target inflation for the country is 8%. We're wondering what the CBN is going to do now, because of a surprise move in March when the central bank decided to hike rates, even with the slowing of inflation in the country. So we're going to be looking at the next, that's Kenya. We're seeing what Kenya has for the market there. Kenya's inflation rates fell more than expected in April after food prices eased to a 13-month low. Now, Kenya's rate setting committee is poised to leave borrowing costs unchanged. Well, that's what analysts believe, considering the effect of a jumbo-size hike that they had in March after inflation softened more than expected in March as well. Now, in April, I'm going to say, now the stance will help balance the need to keep the cost of borrowing for individuals and government, despite a push by investors for a higher coupons from government securities. Now, we're seeing for Kenya, they're going to be meeting on May the 29th to give that decision. Now, the central bank interest rate is currently at 9.5%. They're talking about the jumbo hike they had from 8.75 to 9.5%. Inflation rate is still at 7.9%. It's slowed from 9.2% in March to 7.9% in April. Now the target for the central bank is between 2.5% and 7.5%. We're seeing how the National Bank is going to keep that. Now, if we're looking at Angola, for Angola, the National Bank of Angola kept its benchmark policy rate unchanged at 17%. And the decision that was announced on May the 19th, 2023, that's when they had their MPC meeting. After slashing it by 100 basis points in March, the bank has reduced the benchmark rate to 17% from 18% in March. Now, the second drop in 2023, the decision is coming on the back of sustained downward trend in inflation. We're seeing it from 10.8% in March down to 10.6% in April. And this was driven largely by an increase in the supply of essential goods and fuel and food subsidies. Now, headline inflation, as I mentioned, has eased for the 15th consecutive month. That's reaching its lowest point since July 2015. Now, if we look at Nigeria, that's where we're going to be focusing on today. We're seeing the central bank expectations are really high. Our Central Bank of Nigeria's MPC are deliberating on interest rates with its 3rd meeting of the year in progress. The committee faces the decision of either continuing its current cycle of rate hikes or maintaining unchanged policy parameters. Now, during its last meeting, the MPC raised interest rates by 50 basis points to 18% from 17.5% and left all other parameters unchanged. And that marked the 6th increase in the last 12 months. The Central Bank of Nigeria's MPC is predicted to extend its longest phase of monetary tightening in more than a decade. That's to temper inflation. However, despite these rate hikes that we've been seeing, the consumer price index, that's the CPI, has continued to accelerate. It rose to 22.2% in April from 22.04% in March. And that's a near 18-year high, and that's likely to remain elevated. We've seen the target inflation for the country, for the central bank, at 6% to 9%, and the asymmetric corridor is still the same. Liquidity ratio is still at 30%. We're wondering what the central bank is going to do today, if they're going to take a hawkish stance or maintain a dovish stance at the close of the meeting today when they're making the decision, Laddie.
Definitely be looking out for that. Thank you so much, Will, for giving us the analysis there from major African economies. All right, let's bring the conversation right here now. I have with me right here in the studio Mr. Tajuddin Ibrahim, Director, Research and Strategy, Chapel Hill Denham, right here in the studio. Thank you so much for coming on and for this special day. We get that made decision. And I have with me via Zoom, I have Mr. Tosin Osunkoya, CEO, Commercial Partners Asset Management. Thank you for joining me. Great to have you. So let me start with Mr. Tajuddin right here. So from what we saw there, we see that most major African economies now, everyone's been battling inflation since 2022. But I see a trend. There's some kind of deceleration with inflation in those economies, like in Kenya, South Africa, Angola, and Ghana. Even though Ghana, got sky high inflation last time, I think it got to a peak about 50% about that. But here is a different case. How are you seeing those economies?
So I think nothing different is happening in those economies. But what I reckon is that if we take a global view at inflation in developed economies is coming down, largely as a reflection of the higher interest rates environment. In some major global emerging market economies, we are also seeing inflation coming down. Africa is different, largely because most of our issues are not driven by, higher or too much money supply in the economy. So if you look at Ghana, for instance, it is not because of high interest rate that inflation there is moderating. It is moderating largely because of the high base effect for last year. So we also in Nigeria here should recognize that our own inflation is not driven by demand. It is more driven by costs. And the more you see cost pressure, most likely you are going to see higher inflation. The only thing we can be waiting for is high base effect also in this country.
All right, I guess we'll be definitely waiting for that. But let me come to Mr. Tosi Osunkoya now, that's with us via Zoom. So looking at, all of this, we did see, inflation there moderating in top African continents, right? African countries on the African continent. But right here is a different case. In Nigeria, how are you seeing this?
And that's why you would continue to see some moderation or a slight increase in inflation. We would certainly not see, in my view, we will certainly not see reduction in inflation this year. You agree with me that we are all looking or anticipating for the removal of subsidy. The challenge we have, like Tajuddin said, it's not just about the costs or push or the demand pull, but it's largely because of the structural challenges that we have in this country. So if you take, for instance, and it's important for us to bring this down to a particular context. So for instance, the food inflation has continued to be on the rise. I think the last print was 24% from, I think, 23%. What you would experience is the fact that food produce coming from the farm to the market would certainly experience, increase in cost of delivering in terms of logistics and transportation. You can imagine what has happened in the last few months with regards to transportation. And if you have any issues by reason of your food not arriving at the market on time, it's certainly going to increase the cost of that particular produce. So that's one element that the monetary authorities couldn't, I don't think they have the capacity to address that. What we've been doing, and when I said that we are running out of arsenal, what we've been doing is to attack inflation from one angle, which is the monetary, authorities' measures. However, we fail to address the fundamentals and the structural issues in this country. Not until that is done, we might not experience what other, African countries are experiencing in terms of moderation in inflation. Even when we have a high base effect, you would expect that there will be some slight moderation, but we are not seeing that because of those structural challenges. So, Ladi, that has to be solved first. There must be a concerted effort by both the fiscal authorities and the monetary authorities before we can address inflation in this country. In an ideal market, for instance, in the US, you've seen how Fed has, increased or its hikes, and we've seen the solution that has brought to the table in terms of reduction in inflation. But unfortunately, Nigeria is not an ideal situation.
Right. Well, I do hope at some point we do experience deceleration in inflation at some point. But let's head to the CBN headquarters. Right now, we can see there. It was an empty room before now when the show started, but right now we see some of the committee members starting to be in the room at this point, and we also have reporters right there. We're waiting to see when the central bank governor arrives, and definitely we'll get that briefing. Stubbornly high inflation, that's what we're battling right here in Nigeria. So with that, we're going to close Business Incorporated right now. When we come back, MPC special right here on Channels Television. Do stay with us.